Ladies and gentlemen of the crypto space, we're live on a Monday, October 4th at 12:05 p.m. Did anyone think the weekend was pretty good? Heck of a weekend. And clearly it's not filled with exaggerations and hyperbole of it's a crash, the world is falling apart. But on the contrary, it was exciting. And there was a degree of exuberance where people thought the wrong choice was that the market was going to go down. So, it's exciting and you get a lot of emotion when it's there's evidence and market activity that suggests it's wrong to think the market's going to go down, but the contrary is just as meaningful. Um, when you think you're wrong when the market's going up and it's actually going to crash, oof, that's when real panic sets in and emotions are overwhelming. But I would argue both are irrational. The emotions of a market going down or going up, and fear of being wrong that have no bearing in a rational thought process of trying to understand what to do. I think they're hyperbole. I think the word crash, the word bubbles, are useless words in trying to understand the markets. I think no matter the valuation of any market, capital always flows from underperforming assets to outperforming. So in legacy finance, they'll do an adjustment. A broker will do an adjustment to a portfolio, like a couple of times a year and reallocate from underperforming sectors to outperforming. But when me, we're managing our own capital, we're responsible for adjusting the portfolio from underperforming to outperforming assets. And, that's not the way it worked in legacy finance. Some people did it in legacy finance, but in crypto, we all really do it because there is no manager for these types of plays. It's us managing our own plays. So we get to make these choices. So don't hold allegiance to assets. Allegiance is destined for the portfolio. You need to reallocate. You need to adjust accordingly and migrate capital from one business to another such that your capital is allocated to a business that's outperforming, that generates more revenue. And clearly, you don't want to engage in risky business or excessively risky business. That has a component in the calculation as well. So you want stable revenue, more predictable than less, so on and so forth. Bubbles and crashes. Some fancy words right there. Let's get into the stream and see who's here. Gillis is in the house first on the list. I am the future. What's up? A pleasure. Daniel, good morning. Crypto Bets, what's up? Lewis is in the house. Can we buy stocks yet? Of course not. I mean, if you look at any of the markets, they're up. And what you want to do is buy when people are fearful. And that's that whole fear and greed meter thing. And that's what Warren Buffett says. You buy the fear, you sell the greed. I think those play meaningful roles with regard to, or those are meaningful components of an entry calculation. When the hell do you buy something that's up, up, and up? But if something's up, up, and up, one, it's outperforming. And two, is that the end? Why would something that goes up, up, and up stop going up, up, and up? What you want to do for assets like that is wait for an opportune entry. Something's up 1,000%. The crypto space, this is all nascent technology that has very grandiose expectations for the future, and iterating into the future. So there'll be a lot of steps between now and where these technologies are heading. So there'll be plenty of entries where people get a fair amount of fear. They sell it, and those are the entries, and that's the blood. You buy the blood. Um, the contrary, we're not in that type of market right now. Right now, the prevailing market sentiment is bullishness. You buy the dips. And, there's an inevitability that the market will probably shift. But I think all of it is transitory. We know where things are heading in the coming years. Do we expect an overwhelming deflation again like we did in 18 and 19? Willie Woo doesn't seem to think so. And I think that's quite a rational argument. And he substantiates all his opinions with on chain data. And I agree with that conclusion. I think we'll have our runs up, our significant Multi-X runs up, and then we'll have retracement, where people have a doubt. They have their fear. I intend to buy that fear because the businesses are growing, one. The businesses are producing revenue, and that revenue can be reinvested in the businesses to buy other people's fear. Because they look at the market in a shallow way. Buy low, sell high, give 30% for protection money to the U.S. government. It's protection money. I don't see it any other way. Shishk. Hey Noah, hope you had a nice weekend. Decent weekend with the family. Always a pleasure. Crypto Bets here for some ice and spell alpha. I mean, you don't need more alpha than those two words, ice and spell. Curve looks ridiculous. Now let's go out to the daily because that's the macro perspective. This is really all that matters. So with symmetrical compressions, you usually have two runs up and, well, two runs. Run up, run down. Run up, and down with this. And what's interesting is this very bullish in my eyes because the run down wasn't to support. The run down was to the 200 EMA on the daily. And to top it all off, if you zoom into where's the averages? Well, SMA. Better. There you go. So if you zoom in, check this out. Whoa! What's this? Ho, 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 ho. That's a 50 SMA cross with the 200 SMA on the daily. That's called a golden cross. And this candle looks ridiculous. That looks like a nice pullback. And but it would have been a hell of an entry at 260 and change. And this takes time. These candles take a couple of days to play out, and then it rips higher. And we're very much looking forward to encountering that line of resistance, which is the historic trend line. I think that this is the ultimate trend line to me in the entire crypto space. And I'm not, while Bitcoin ideology is sound and has its rational merits, and I agree with it in entirety. I think the notion of disintermediated financial services has a much larger narrative and has the potential to appreciate significantly more. That doesn't mean you don't want to store value in Bitcoin at some point once you accumulate an excess quantity of value, but the productive capacity of the equity in Bitcoin is relatively small as compared to other assets and asset classes, so to speak. Bitcoin is more of a value storage technology, whereas some of these assets are very much consistent with just a full-on business, a decentralized or disintermediated business where you own a portion of the business. Dan, good morning. Didn't think I'd be able to make it to this one. Glad I did. You tweeted something the other day about getting into precious metals after crypto. Can you please clarify? Not after crypto, but there's no reason not to have some precious metals. Nice couple of blocks of silver, a couple of bars of gold coins. I think they're beautiful. And you buy them because they're beautiful. And you also buy them because there's a large part of the older generations that purchase it as well for value storage. And it's a prevailing narrative going back, everyone knows, thousands of years. So I think that's a great way to not be all in and clearly not spreading too thin if you're going to take some capital and deploy to the precious metals markets. And I think it's good to have probably some securities as well. There's some very good quality long-term plays in the securities markets that I've talked about over the years. Folks know my exposure to lithium, cobalt, nickel, and graphite miners that have, it's 2021, so 9 more years. I'll check back in 2030, and that's okay. Definitely not a short-term play there. Joe, did I watch you on FTM alerts? No, probably not, but FTM is solid. I have a small position in Phantom. What do I got? Checking. 1.14% deployed to the Phantom position. 3.15% frac shares. So it's a fraction of my frac shares position. Did I hear about Juno smart contracts coming to Cosmos Network? So Cosmos and Polkadot, Astra, you guys don't know. I'll share Astar network. So this is the evolution of Plasm. Captain Weber knows all about the Plasm stake drop, lock drop. So we did that bad boy last year. Got our Ethereum back up right about now, or a while ago. I claimed some Ethereum from that lock drop. But this is early. And these are those spec plays that are a 0.5% or 1% of the portfolio. And it's going to be big. Cosmos is going to be big. You guys know it. We've been talking about the China narrative. Give it 4 years, give it 5 years. It's going to be very interesting. Good bar, simplest path to dabble with MIM spell ecosystem. Just a spell position, and you stake it in Abracadabra. Now, the whole trick there is just entries. I've been talking to a lot of folks, and I have some ass vids that I got to respond to when I have some time today. But just a staked spell position, which is up to 1.0914 spell. That's pretty cool. That thing's been moving. Spell in, S spell out, hold S spell, and when there's room to borrow, you could actually borrow against your S spell, but there's currently nothing to borrow right about now. You could borrow MIM using S spell as debt, which is awesome. More Aave coming soon. Aave already launched on Avalanche, which is pretty cool. Professor J, FM Alexander, Hex is a monster. Yes, indeed. It just likes to go up. If you're into capital gains trading, folks, past experience does not indicate where it's heading, but Hex has proven to be very resilient with regard to price appreciation. So, you drop 100 grand in, grab 20% gains, and you make 20 grand in a couple of days. But bear in mind, you're going to have to pay capital gains tax on that 20 grand. You take out your profits, you wait for a dip. There's dips. It fluctuates. So you're able to get in, extract more profit as more and more folks. So the art of Hex is folks are piling into the long-term bonds. So you can really capitalize on dips being bought. So that's how you're able to extract capital gains, from folks that are doing a long-term play. And it's quite predictable. You could see it on like DeFi Sniper, where there's big money going in at strategic times, but they're not locking it. Like the most of the traders that I know have really no interest in locking long term on Hex, but they're able to capitalize and extract significant value from persons that are taking the long term, the long money approach. So there's a good trading opportunity there. Just not for me. I'm not into capital gains, guys. Professor J, good afternoon. A pleasure. Joshua, good morning. Bees Irish, good day. DigiLight, Noah, my man. So is accumulating curve token for future price action and access to the money market's a good idea? Well, accumulating curve, I'm done. I've accumulated all the curve I need. We've been accumulating curve since April of 2020, give or take. It's been a long, long road to get to where I was looking to be. So accumulating curve is the same story as spell right about now. All this stuff is undergoing asymmetric appreciation. Where's the dip? I mean, this is up. The dip was down here at resistance at $1.65, and now it's 270. Albeit the breakout could easily go to $10. I've seen estimates at $15, $20. So a dip would be maybe this resistance support line. So if you could catch it at the top of the guppies on the daily, or if you go out to the weekly and you catch it at the bottom of the guppies, if you see a dip down to $2, you're going to get a bonus on your investment when it goes back up to resistance. It'll probably get stalled at resistance for some time, just like it did about 2 weeks ago, give or take. But when this thing breaks resistance, it goes up. $3.50, $4, and why is it going to go to 4, 5, and eventually 6, 7, 8, 9, 10? Patience and entries. Entries, I've never been one for good entries. I'd buy in and I'll watch it go down, but I know where it's heading. So that's that type of market this is in. A lot of folks that have been around DigiLight, from like 2017, Very hard to get entries. Everything was completely parabolic. The difference this time is the parabolas are not likely to retrace all the way back down. As Willie Woo talks about, you're going to have market cycles up and down, bullishness and bearishness, but not full retraces, and 2 years worth of complete, market dormancy. Up and down, but it'll just keep going up over time. Zachary, a pleasure. FM, are the transactions working for you guys? Well, it depends on the network and watch your RPCs. RPCs get sluggish when markets get hot. We know that from our Polygon experience. Larry M., Larry's in the house. Jake, Noah, you've talked about MMT. Can you expand more on your thoughts and how it plays into the financial future? Well, it's complicated what's going on in the political world and the financial world with the Fed and the Treasury. But Luke Roman highlights very nicely that once a country reaches 130% debt to GDP, 98% throughout history have either defaulted from inflation or deflation. And that's really a binary choice. And we're approaching the debt ceiling on the 18th of October. Treasury's out of money, so the president's on TV today, and obviously Congress and the House have been dealing with how to pay the national debt, which is treasuries and bonds, so on and so forth, as well as um, you know uh, entitlement obligations like Social Security, Medicare, Medicaid, so on and so forth. So if the debt ceiling isn't raised by the 18th, Social Security checks don't go out. And that's not going to be pretty. So MMT really is the notion that debt doesn't matter and debt is money. So mint the $1 trillion coin. So that's what they're going to do. Either going to mint the $1 trillion coin or raise the debt ceiling. And that's where the market's heading. I don't think they're going to want the deflation to occur now, because then the old world order goes bye-bye. If you default on bonds, no one's going to buy it. And then the Fed's going to be monetizing 100% of bonds because no one's going to trust the bond anymore. It'll destroy the credit rating and the full faith and credit of the United States. And we're talking about in 14 days. We will know in 2 weeks whether the United States is going to end its current financial system through a process of deflation and defaulting on debt obligations, or they're going to continue, they're going to perpetuate the old world order vis-a-vis an inflation process into the short to midterm future. How it works out in the long term, we have no idea. But, odds are they're going to want to inflate away the debt. Otherwise, entertain the notion of allowing the old world order to fall and something else to be born from the ashes. HB, good morning, amigos. Best 30 minutes of the day. Always a pleasure. It's the best 30 minutes of my day, too. I love it. Alex, hey, no, I can't wait to hear you talk about Spell. Well, what's to talk about? Look at this beauty. This thing is basically straight vertical. Now look at the bounce back. Look at this candle. So the dip's gone. This was the dip. And here's the psychology here. So it's a nice dip. If you go out to the 1 hour, well, not really. Let's go down to the 5 minutes. So you see it breached guppies. You had a double red guppy. And this was actually a support flipped resistance. So this is where fear is setting in. Fear's like, oh, shit. Support flipped resistance and a lower low. And clearly someone was like, yeah, okay, no. So they bought it all. They bought everyone's fear, and it just went up. This takes a lot. This is where, folks, courage and taking that leap of faith to believe in ideology, find conviction, and you buy when everyone else is fearful that it's going to come crashing down. And then it just starts the cycle over. We got a fresh higher high, and it just goes up. That is a heck of a chart. I mean, you don't buy it now. This isn't where you get an entry to an asset. You got to wait for a red candle. Bear in mind that's the 30-min. So if you go out to the 4 hour, you could have easily bought yesterday. Yesterday, end of day yesterday was the dip, and now this thing is ripping. You got to get over the FOMO because I know folks are probably wanting to buy right now. This is not when you buy. You wait for it to go even further up. and then you got the dip, and then you have confirmation that it went up, and then it's likely to go further up. Things that go up tend to keep going up, so you buy dips. You don't buy when there's not a dip. You buy the blood. You buy the fear. Holy crap! It's at 0.006. All right, let's check back when it's a penny at the end of the week. I'm horrible at picking entries, guys, so I really don't have advice for it other than buy fear. And I got words and phrases and ideology. I'm not good at buying dips. Digilight, Noah, can you mine Vertcoin while gaming? And it's pretty cool. Yeah, Vertcoin is old school. I used to mine Vertcoin back in the day. Larry, I have a large curve position looking to diversify. What is more high risk, high yield reward, revenue generating asset looking to take on more risk for potential more reward? I don't know. There's a lot of stuff. I mean, Avalanche Rush is still there. Folks can believe that they missed an opportunity to really hit it when Avalanche was firing on all cylinders. There's a lot of yield all over the place. You could easily get 100, 200% return on your money with the higher risk positions, with like a single volatile asset or double volatile asset LP positions with incentives, 100, 200%. Or if you go to like a beefy finance and the auto compounders, again, 3, 4, 5, 600%. But you can watch the principal be extremely volatile. Avoid the pool twos. Pool twos are horrible. Just a gimmick. But the auto compounders are interesting. Beefy Finance, Yak on Avalanche. But there's risk associated with them because of the third party protocol that ultimately they're consuming themselves. So watch your risk profile. Just because you want more return doesn't mean you should be taking on more risk. Just remember, we work, we get a salary, and the crypto space works where you can actually save your money and outperform inflation/debasement. Klaus, Ave live on Avalanche. Yes, indeed. I saw that probably like half an hour ago, give or take. Pretty cool. Larry must be revenue generating. Yeah, I'm not buying anything unless it's revenue generating. I have no interest in paying protection money to the federal government. Look at this chart. Holy shit. That's crazy. Are there any bridge plays that offer significant revenue share? Hop protocol is interesting. Kieran, hey Noah, hope you're good. I'm pretty good today. I have work to do when I get off this. I got a merge conflict with two modules in an Android app that's driving me nuts. I don't think it's dependency related. For instance, the change set only just has class modifications. I'm like, where the hell is the manifest merge conflict coming from? It doesn't make any sense. Literally, I could recheck out what's currently at source control head for the branch, and it compiles. I have like 5 classes modified, and I'm having a manifest merge issue. It's infuriating right about now. Like, there's no Gradle mods at all. Anyway, that's programming talk for you guys. Franco. Good morning, Captain. Any thoughts on Ohm? Ohm is cool. I don't have any exposure to Ohm or time, and I don't have an issue not owning something I would like to own, and that's okay. I believe the conceptually the technology is fascinating. The notion of selling bonds with Olympus Pro and building treasuries, some serious conceptual stuff right there. Not an asset that I am exposed to. What are your thoughts on Daniel's tweets working on a proposal to restructure spell emissions based on target APY reducing inflation? Well, those are the incentivized returns that facilitate liquidity. I think they're past the point of critical mass where people will provide liquidity just because they want to own MIM and hold in a stablecoin position and know that folks are swapping the crap out of it because that's the preferred stablecoin. I think that sounds great. Professor J, 3x3. I could appreciate that. Joe Papas, earning trading fees on Curve, sushi, ice, great, but the real opportunity is leverage yield farming. Well, that's why Abracadabra is a whole nother level. There's very little risk at all in leveraging stablecoin LP positions, especially stablecoin LP positions that are incentivized. So, you get 20% on a position, you leverage it 3x, again, 60% on a stablecoin position. Woo! That's some secret sauce right there. You're not doing that in legacy finance. Um, Professor J, do you see Olympus Dow as long-term 5-10 year play? Unknown. I think it's speculative technology. We don't know how it'll play out. I'm never early, never late, and I got no problem buying it at a later point in time. They want it to be a treasury asset. That sounds great. Everything about it is tantalizing, and I don't need to have exposure to it. I have different goals, and my goal at this point is a stable daily revenue stream, and I'll adjust accordingly to achieve that. I don't need to outperform and grow my principal portfolio significantly anymore. Bees Irish was going to grab some SLP because of Axie, not sure. Well, watch the volatile pairs. The double volatile pair is going to be quite the volatile principal in an LP position. I don't necessarily mind. If anything, I prefer stablecoin paired LP positions. I just don't have that kind of exposure currently. Hey, Noah, enjoying the ASFID clips. You're welcome, Alan. More. I got to do more. So I got to get up in there. I know I got like 4 or 5 videos to make sometime today. Alex Spell is my retirement. Yes, I think that I like that statement as well. My mentality works as follows. I expect the market to shit at some point and for fear to set in, and I am prepared. I am prepared for the market to tank. If I am prepared for the market to tank and it doesn't, that's even better. I'm prepared for an 80% hit on a position or maybe a portfolio. I'm ready. So I know where the market will be in 5-10 years. And if the market doesn't do that, yay, now I'm just happier. Booze, Captain, I have X sushi that I intend to hold long term, but I learned about Abracadabra, borrowing a safe amount to earn on Curve with MIM, but I never borrowed crypto. I'm a little scared. So you should be. There's risk associated with leveraging. We're collateralizing a volatile asset. Watch your liquidation. Only over collateralize significantly. I'd only borrow probably like 25% of the value of your sushi, in which case you'd have to experience a 75% reduction in sushi price to get liquidated. The liquidation price isn't that bad. I think it's 12.5% for sushi. Whatever, it's on the Abracadabra page, tells you the liquidation fee. But volatile assets, you got to be careful. You can get liquidated. There's no reason to be scared. What you have to do is be calculated. And if you're willing to take on that risk of liquidation, okay, but just don't take on excessive risk and only borrow a little bit. Joe's in the house. Alex, Spell is on a breakout as you stream. Can't beat that. Yeah, this chart looks absolutely ridiculous. There's no red candle in Spell. There's a couple. And we're on the 4 hour. So if you go to the daily, I don't think this. I mean, this is incredible yesterday and today. I'm surprised today's candle turned green so quick. If 2017 pumps happen now, Spell is going to around $1. Spell goes to $1. I'm buying all you guys cars. Lisa, what did you miss? Be kind, rewind. It's a beautiful stream. It's always here. It's a good stream today. We try to avoid hyperbole and exaggeration and focus on the way a market really is and where it's heading. And we don't have to have fear that we're wrong. We don't have to have fear that the system is going to collapse. We know where the market's heading in a couple of years. But be prepared. If you're prepared for an 80% drawdown on your money and it doesn't do it, that's a pretty good mental position to be in. Think about that. Don't buy Spell, farm it. Even better, because you can get Spell from stable coins. Take $1 million, you throw it into MIM on Arbitrum, you get it, what, 50, 60% on your stablecoin position? You're making $400,000, $500,000, $600,000 off dollar stablecoins. So that's very interesting. Everything changes when you actually get real yield on your money. You don't have to take on risk if you have money. So lots of choices. Opportunity overload, no doubt. Kill us by the blood. That's gangster. Well, it's Warren Buffett. Buy the blood. Buy the fear. Buy the blood. People are afraid they're going to lose their money because they're buy low, sell high mentality type people. And they're going to sell it because they're afraid. And yeah, I'm going to buy the shit out of it. Aave launched on AVEX, John. Yes, indeedy. Alex, I looked up ICE. It's really amazing tech. Yeah, I look forward to it. They're probably launching towards the end of the month. Come from traditional market HB, buying Curve after such a run is hard. I'm seeing options to farm Curve using stables. Yes, indeed. That's your choice. That's your choice. It's not easy when to get entries. I'm horrible with entries. All I know is this is the long term trend. Could get unclick. Get out of here. Painting tool's broken. All right. I'd have to refresh the page. Point being that this thing has been in a triangular compression for its entire life. It currently just had a golden cross to the upside on the daily. I look forward to this thing breaking that red line. Once this thing breaks that red line, that's when the parabolic advance starts, runs the fibs. Probably in a couple of months, it could get all the way up to like 5, 6, 7, 8, 9, $10. So it's very hard to get entries. I appreciate that in entirety. How do you buy something that's up significantly? Well, bear in mind, it's not up too significantly. All right, go away, blue line. It's not up too significantly as compared to historic price points inside of this triangular compression. It was up at $4.60 at one point, and the current price is $2.78. Still like XTK, yes, indeedy. Not that I have exposure to it, but I like the dev team, most certainly. Booze, do you know about tranches? I do not. I've heard of chess, though. Very cool. Greg, you're in finance, so expensive? Folks have mixed feelings about Yearn. I think they're ridiculous developers. Frankly, my position on Phantom is in a Yearn contract, interest-bearing FTM. Kiran, you sound like some of the engineers I work with, the frustration they feel, but it's fun solving problems. Yes, it is. When the problem is actually solvable, when you just, struggling to figure something out, that gets a little frustrating. Would love to get to the point of doing this as a UXer. UX is something that us developers like to fix sometimes as well. I'm a minimalist, proper navigation, simple UI. Don't over feature the crap out of people. Too many features and people have no idea what they're doing. UX is quite the art as well. Without fear, I lose employment, I lose income, passive income streams, right? Without fear. Fear gets in the way of a lot of success. Klaus, Discord airdrop of spell to $1. My goodness. It's at 0.6 cents to $1. You get a car and you get a car. Oh, that's what I break out the Oprah voice for that one, Dogoshi. No, Dan, any thoughts on Beefy 3-curve pool? I do not use Beefy. Beefy is an auto compounder. Auto compounders are okay, especially the ones that are bid, tried, and tested. And Beefy's been around for a while, since BSC days. It's live on a couple of other chains, so it's considerable. Auto compounders are relatively simple, and there's a lot of status called boilerplate code, so they're more trustworthy nowadays than they were back in the day, like 2020 DeFi summer. Just something I'm not exposed to currently. You could buy electric cars for all if Spell goes to $1 and you're supporting your precious metal position, right? Oh, to $1, he said. Woo! Killers, I got dibs on Aston Martin. Yes, indeedy. If I'm buying, you get everyone's going to want them Aston Martins. Do you think you will extend your lock on Curve when they unlock? I'll have to assess the market conditions when the lock expires. We adjust from underperforming to outperforming assets, and we'll only know how the market will be in the coming years. Wave, better late than never. We'll definitely start from the beginning. Yeah, it's a good stream today. It was about 40 minutes so far, my friend. Mickbon, which stablecoin will prevail through the new U.S. laws? Well, my bet's on MIM, Frax, UST, and Andre's Fixed Forex. I think digital stables that have nothing to do with bank accounts. Treasury is like, we want stablecoin issuers to register. And the crypto space says, okay, we're just not going to use dollars at all. Kind of changes everything. Just manually compounding greatly outperforms B fee. It's been proven. They got a 4.5% fee on every compound. Ooh, It's a big fee. Although, depending on the chain, management could be expensive with gas fees, so that's something to consider. Alan, ohm versus time, risk from centralized DAI, time only on Avalanche right now. Well, there's a lot of considerations. I think even ohm is an Olympus DAO is an experimental monetary policy. So I'm sure it's downright fascinating, and it could very well be a genius. Could very well be genius, and you don't have to buy everything you want to buy, so that's okay. Yeah, there's a whole lot of mess going on in legacy finance booze. I think the markets are going to go down, and I think capital will reallocate from underperforming to outperforming assets, and it doesn't matter which market it is. Those assets might be bonds. Those assets might be dollars. Those assets might be crypto assets. The market will tell us where the capital is reallocating. And that's where you want to reallocate as well, from underperforming to outperforming assets. Jake, Professor J wants a Tesla. UST MIM potential pull on curve would be insane. Yeah, as Daniel describes, it would be serious. 53 people in the stream, 28 likes. We can do better. All right, let's wrap it up for today. Monday, October 4th, 12:41 p.m. It's always a pleasure. Tell everyone to subscribe. After party on Discord. Get those Ask Vid questions rolling, and I'll get you your personalized responses. I wish you all a wonderful day. I will see you tomorrow. Peace.